counter and then proceed to the YouTube queries. So let me first take the query that we've got on the mail. This is from Setu Ramalingam, saying that he's a long-term investor and he's holding only value shares. At present, the absolute gain of his portfolio of shares is 87%. He wants to know whether his strategy is right, that he rarely sells and adds on dips on price of shares. Experts say the market will crash any time. He's asking, shall I continue with my strategy or book profits? Gaurang, this one is definitely for you. His strategy is that he rarely sells his stock. He definitely adds on when there is a dip in the market. But is this particular strategy right? A lot of investors would be thinking, there would be fears that since the market has seen a sharp rally, there's bound to be some sort of a correction. So what should Setu Ramalingam do? Is this the right way? Is it the right strategy that he is actually adopting?
Well, first of all, let me congratulate Mr. Ramalingam on the great strategy that he's put in place, that is buying on dips. Secondly, fantastic return of 84% according to what he's mentioned in the mail that you just read out, Sharon. Thirdly, Mr. Ramalingam, you have to be open to the fact that markets are prone to upsides and downsides. These are the two faces of the market. You cannot have a market which will go up consistently, because that is a great bubble that it creates. So corrections are always healthy, and that gives you an opportunity to add to your stocks over a longer period of time. He rarely sells the stock, he says. Now, one of the prime reasons that you invest in equity market is to create wealth. And when you get 84% return, Cheryl, my advice would be that at least take some money off the table and diversify your portfolio into other sectors. Unfortunately, I'm not aware about what is the portfolio that he has and what are the shares that he holds in his portfolio. But, revisiting your investment periodically and booking profit is also one of the fundamentals and principles of investing into equity market. And like I mentioned, markets have two phases, going up and coming down. And whenever markets attain a new all-time high, there is a tendency, and history is witness to that you have corrections and consolidation. So don't be surprised to that. But look at your goals and objectives with what you have invested in equity market, and periodically revisit your investment and, at least go on booking part profits and diversify.
All right, let's get on board. Queries from the YouTube as well then. Now we've got a query coming in from Sagar. He's saying he needs a technical view on Poshak Limited. It's a small cap company that's listed on BSE. He's bought about 75 shares at the levels of 2,200 rupees per share. He's checking that if this stock can see further rally on till about 10,000 rupees per share, and he wants to know whether he should book the profits at current market price. Kunal, unsure, but do you track this particular company? Poshak, it's a BSE listed company, a small cap company, as Sagar has mentioned.
So apologies for that. Shred, I don't track the stock, so won't be able to offer any comment on it.
All right. Let's move on to the next viewer query then. And this one is coming in from Srinivas Rangaraju. He's saying that he has 46 shares of Alpha Geo, which he's purchased at an average price of 900 rupees per share. He wants to know what should he do with this particular counter. He's a long-term investor in this particular stock. Kunal, any view on Alpha Geo?
So I stock had a I would say a 1.5 or 2 months. It's trading at 297 approximately. The all-time high levels for the stock was approximately 1,000 or 1,100. I think 2016-17. So it's trying to find its feedback on the charts, but somehow the stock patterns are a bit inconsistent on the longer term charts. You don't see stronger periods of uptrend which last for years. There have been struggling periods of uptrend for patterns for price patterns for a stock like Alpha Geo. So wouldn't recommend holding on to the stock at current levels. I think you have a lot of better options on the large cap fund. I think as an alternative, I would probably look at or suggest these stocks. They look fairly attractive from a longer term perspective. And one of the stocks which we just discussed start of the show, Tata Power, I think even that stock is a good alternative as such. So would recommend a switch if it's a long term investor.
All right. Our next query is coming from Nino and wants to know a long-term view on Quick Heal Technologies. Gaurang, what's your take on Quick Heal Technologies? Do you track this particular counter? How is it looking over the longer term?
Well, Cheryl, unfortunately, we don't have coverage, so as per regulations, I can't comment on it. But our sense is that we should look at sectors which look promising over the next couple of years. Pharma IT has been hogging the limelight. Along with that, we are extremely positive on private sector banks, metals and cement, and FMCG, sector. My advice would be to look at large cap in these names. And if I had to identify some names in IT, then my sense is HCL Tech, TCS, you can pick either of them. Pharma, we are extremely positive on names like Cipla and Divi's Laboratories. Private sector banks like HDFC and Axis Bank can qualify as long-term investment idea. And in the FMCG pack, Hindustan Unilever and Tata Consumer would be the recommendation. So our belief at Geojit is that these sectors are more promising over a longer period of time.
All right. Our next query is the one that we've got from Padma. She's saying that she has 200 shares of CCL. She wants to know whether she should continue to hold on to CCL or look to switch to Indocount, another potential share for growth. She's saying that will there be any sort of a growth in Indocount or should she stay put in CCL? Do you have view on either of the stocks, Gaurang, Indocount or CCL? Does it make sense? Like she currently holds on to some shares of CCL, so does it make sense to stay put in that or should she look to switch to Indocount?
So Cheryl, CCL Products is the company that we have a fundamental coverage on, but it's very close to our target price. So my advice would be that once it rallies maybe about 5% wherein which our target should be in place, to book out over there. And as an alternative investment idea, we discussed a couple of stocks just a while back. So if I had to identify one particular sector over there, then in the cement and metals, I can name two companies. Cement, a large cap company like ACC or Ultratech would be preferred, or in the metals universe, Tata Steel or JSW Steel. Would advise a switch to either of these companies.
All right. The next query is for you, Kunal. This one is from Jay Kishan. He's saying that he has 30 shares of ONGC, which he's purchased at 115 rupees per share. He wants to know what sort of a target should he look at for the next 6 months for ONGC.
I think it's an interesting play because many of the, so right now we are into a phase where many of these PSU stocks, they haven't got strong body. Now, yes, we've seen that over the last 5-10 years, ONGC has not been a great wealth spinner or a wealth creator. But on the short-term charts, there are a lot of prospects which are emerging for the stock, and purely as a momentum play, I would look at some upside scaling up for ONGC from current levels. So purely as a short-term, medium-term play, and looking at the prospect, I would suggest that probably the investor can hold on. Would expect 150, 155 is a potential 6 months to 1 year kind of a target for ONGC. But again, as I said, that if it's related to longer term, then I think you will have to probably rethink because the stock doesn't encourage longer term investors to stay put into the stock. So if there is a dramatic change in the stock price or in the in the stock, say over the next 6 months or then the prospects should be completely different going forward. But looking at the last 10 years of charts, it is not one of the best wealth creators from the basis. So I would suggest that have a medium term kind of a time frame, more of a trading outlook. 150 approximately should be a trading target for a stock like ONGC.
Gaurang, coming to you on this next one, it's quite an interesting question, I think. We've got Rajiv, who says that he's a long-term investor and he's got a 5% allocation on the portfolio level to IT with Infosys, Tata Elxsi, and he's also invested in the Nippon IT ETF. But he's asking that he wants to add one more mid-cap IT stock, and he's asking whether you can suggest a name.
So Alex, there is a long list of names as far as mid-cap IT is concerned, but I'll restrict those recommendations to two of them. Mid-cap IT, Coforge or L&T Technologies. I think you can pick either of these companies. But yeah, I mean, he's got a good portfolio.
Comment, Gaurang, on NTPC. Bashisht is asking what the long-term strategy for this company would be. Would you hold on to this, or would you enter at these levels?
So it has tested patience of long-term investors, NTPC, from the time it got listed many years back. I do agree with the fact and reckon that they have got one of the greatest, power generating capacities amongst the power generators. Unfortunately, it has not been able to create returns for investors. Let me give a disclosure, Alex. We are positive on NTPC amongst the power generating names, but we discussed at length at the beginning of the show Tata Power, and I also reasoned out why we would prefer Tata Power as one of the top picks amongst the power generators. So maybe if he's in the money, he can make a switch to Tata Power, or possibly since power sector is rallying and if you see a little bit more upside, use those upsides to make a switch to Tata Power.
Okay, fair enough. It was quite interesting that we just had that conversation. I'm coming to you, Kunal, on the next one. Anup has got a question on Kalyan Jewellers, and he's been holding since IPO. He's asking whether he should hold or sell at the current levels.
Stock which probably has very limited kind of a history. I think the last 1 month has been quite fruitful for Kalyan Jewellers, and it's moved up pretty well. I think today also the stock is up 7.5%, trading at 87 levels, hit back towards a fresh high for itself. So the momentum charts on the short-term basis are attractive, and purely on that basis, I would suggest that you can probably hold on. But again, as I said, since the chart history is limited, won't be able to focus more on the longer-term basis.
Oh, that's fair enough. Coming to you on this next one, Gaurang, we've got Anjali who's bought Bank of Maharashtra and at levels of 30. And I think she's based her investment on the hopes of privatization somewhere down the line. And perhaps that is something that is happening with a few PSPs, but I'm not very sure about Bank of Maharashtra. Would you say that she should hold on, or would you say that she should switch to something like an SBI, which I think a lot of people have said has been re-rated and has a lot of potential going forward?
So Alex, I apologize if I may sound a little bit rude, but I would not even touch the balance sheet of Bank of Maharashtra. Forget about investing into Bank of Maharashtra. And not only right now, but in the month of April as well, we had some announcement from the government that they are trying to sell off larger stake in some of the weaker public sector banks and wanting to exit, barring some few strong public sector banks. And post that, in April, you had rally in some of the names, though the government has not spelled out, correct me if I'm wrong, Alex, in terms of which are those banks, names of the banks from the government side. And there are a lot of speculations that is playing around in the market. So I would be very, very careful getting into these names. My sense is that if you want to look at public sector banks, then we are positive on three names. First one is, of course, the largest bank, State Bank of India, followed by Bank of Baroda. And the third option would be Bank of India. But a humble request through your channel and through this show, Alex, to all the viewers, that don't try to preempt, don't try to jump the gun unless you have clarity from the government as far as the names of those banks are concerned.
No, that's absolutely good advice, Gaurang, especially when you're talking about privatization, because a lot can happen to change the mood, to change the sentiment, and in fact to change the plans of the government. Let's talk about Rajan Vittal's query, and he's asking Kunal about HCL Tech. He's got 100 shares at 940, and he's asking what the target is looking on the charts for the next 3 to 6 months.
So I think it's an interesting chart. Last week or so, the stock has managed to give a breakout. That breakout potential is almost 75 to 80 rupees further from current levels. So I think if you try and do that math, it should be almost 1040, 1050 levels for a stock like HCL Tech. So, I think over the next maybe 2 to 3 months, you could be looking at that kind of a potential target for HCL Tech. But the larger context of it, would probably depend on how the overall IT stocks move up. There is a definite longer term trend change for the IT stocks over the medium to long term. And I think in that prospect, many of these IT names like HCL Tech, Wipro, etc., they should potentially move up higher significantly from current levels. But specifically from a short term views, next 2 to 3 months, I would expect 1050 odd as a target range for HCL Tech.
All right. This next query is coming in from Indumati. She saying, kindly suggest a small or a mid-cap portfolio type stock in the specialty chemicals sector. Gaurang, what's your view on the sector? Any particular stock that Indu can actually look at in the specialty sector segment?
Well, so there are a couple of stocks, but there in terms of valuation, unfortunately, we don't have a lower double digit or a 3-digit stock under coverage. And Cheryl, since the time Indian government took a stand of imposing anti-dumping duty or increasing import duty for specialty agrochemicals, which comes into our country from China, most of these companies have gained a length and breadth in terms of their numbers. And if I have to name a few companies, then Viniti Organics, Tara Chemicals, Aarti Industries, PI Industries, Pidilite, UPL. These are some 4 or 5 names, fundamentally very strong. You can pick either of these names from a long-term point of view.
Okay, I'm coming to you, Kunal, on this next one. We've got Syed, who's asking whether he can buy Gail at the current levels, and what is the view on the charts with regard to a target and a stop loss.
So I think Gail is an attractive bet. In fact, Alex, over the weekend, I had also written an article, expecting that many of these PSU stocks will probably come back, to the thick of very strong momentum over the next couple of weeks and months. I think Gail is also a stock which has done reasonably well. Last 13 months, 14 months, it's performed quite well from levels of 70, 75 to a level of 160, 170. Very attractive on the longer term charts, and I think in that prospect I would suggest a buy on Gail. If you're looking out for say a medium term kind of a target, then I would expect 190, 185, 190 as a target range for Gail, and stop loss for that you can keep it closer to 153.
All right, the next query is from Swaminathan Sundaresan. He is saying that he has a DCB Bank, 1,500 shares, which he's purchased at 95.35 rupees per share. He wants to know what's the 6 months view on this particular counter. Should he hold or sell the stock? Kunal, what's your take on DCB Bank? How are the charts looking for it?
Well, I think he should definitely look out to switch. I think he should go to some other large cap quality banks. Some of the names which I've highlighted earlier, have been the likes of SBI, ICICI Bank. I think these are better stocks which look quite strong, more formidable. And if you're looking out for say something on the mid cap front, then I would probably recommend even an RBL Bank at current levels of 215, 220, where it's currently trading. Or from the PSU side, I believe you can look at maybe a Bank of Baroda or a PNB at current level. So I think there are much more better prospects which could be available from the PSU as well as from the private sector bank. You can pick and choose the kind of stocks as well as the kind of risk appetite, depending on the kind of risk appetite you have. I think making a switch from current to either of these could be a better decision.
I'm not sure, Gaurang, you'll have to tell me if you've already answered this question. Padma has got 200 shares of CCL products. She has not said what level she bought at. And she's asking whether to switch to Indocount or another stock or to hold on to this investment.
I think we took this query, Alex, just a while back, and I did mention that we do have coverage on CCL products. Fortunately, the target price is very close to where the share is trading, and I also mentioned that if you get a rally of somewhere close to about 5% use those rallies to exit from the stock. And I think in form of recommendations, we have spelled out a lot of names from a long-term point of view. You can invest in either of those names.
Gaurang, I want to come back to you on this next one. It seems like we've got a lot of questions on sugar stocks, and that really seems to be the flavor of the season, not necessarily on account of sugar production, but on account of the shift that is underway, seemingly, to ethanol blending of fuel. How do you see that playing out, and what stock would you bet on for the long term?
Most of the sugars are fired up on fallback of this ethanol story, and the government has also increased the blending from earlier 5-10% to 15 to 20%. Correct me if I'm wrong. But what remains to be seen is the capability of blending higher percentage of ethanol into petrol, diesel, etc., or the byproducts of crude oil that we have. I have a little bit of question mark on that, and I don't have clarity on that. Let me be very frank. Secondly, Alex, sugar sector overall gets driven by the news flows that comes from the government side as far as the policy decisions are concerned. So it's a high beta sector. We did cover Balrampur Chini couple of months back, and post the rally that we have seen, it has already surpassed our target price. So unless you have a very risk appetite, I would advise to avoid sugar sector at current levels. You can possibly look at list of sectors that we've listed on: IT, pharma, private sector banks, auto, cement, metal, FMCG. There are stronger players over there than sugar sector. Like I mentioned, it's extremely high beta and vulnerable to news flows from the government policy side.
All right. The next query is for you, Kunal, and this is on India VIX. AB is saying that India VIX is at 14.9 levels, and in January 2020 it was at around 11. Is it that something that one should be worried about?
Well, no, I think India VIX is an indicator. It's more of a sentiment indicator. It's about in which phase of the markets we are currently trading. So when the markets are very, very buoyant, when there is an optimism as such, then it's natural that the volatility ebbs down or drops down significantly. So we can compare it with 2020. We can compare it with earlier periods as well. I think there have been so many instances where the India VIX has been trading lower, closer to that 11 mark or 12 mark for 2018-19 odd period as well. So I think on that kind of a time frame, comparing India VIX with just the last year's level of 11 may not be a right comparison to look at. Frankly, I would sense that watch this as a parameter of more towards how the sentiment is from the overall markets. If the market remains to be in a buoyant zone, then the India VIX remains to be at current levels. In fact, it's possible that the market gains more traction, then India VIX can probably cool off further from current levels and maybe head back towards that 11 and 11.5 levels yet again.
I'm coming back to you, Kunal, on this next one. We've got Sagar asking about Heritage Foods. He says that he's just bought 500 shares 2 weeks back at levels of 325, and he's looking for 500 plus levels. Is that possible?
It's possible. I think the stock in this month itself has done pretty well, up 25% or 26% so far this month, and finally coming out of a breakout of a consolidation. So it seems to be a good chart. Trend has come back, or the trending momentum has come back again for Heritage Food, and generally we've seen that whenever such kind of moves happen, they tend to see a strong follow-through price action. So if that's the case, then probably a 500ish, 480, 500 is what you can look at as a target for Heritage Food.
All right, and that was Kunal's take on Heritage Food. But Kunal, what are your high risk and low risk ideas for our viewers today?
So I've picked up two names, and the first one which I've picked up for BNSN is from the momentum pack. What I'm looking out for is few of the stocks like SBI Life, which I think looks very attractive on the charts. So I think that's one stock which looks fairly attractive to me on the charts, and I believe closer to 1050, 1055 is what one could be looking at as a target range for the stock over the near term. Stop loss could be kept at 970 mark. And the second stock which one could be eyeing is Z Entertainment. I think that stock is making a dash back again towards breakout zone. We've been highlighting the stock earlier as well. So I think from a short to medium term scale, you could look at even Z as a buy. Potential targets to be kept at 245, 250, and stop loss could be kept at 215 mark.
And Gaurav, what are your ideas for the viewers today?
So Cheryl, from a long-term, low-risk fundamental ideas, we've picked two sectors. First one is auto ancillary stroke forging, and the second one is healthcare. So the first one is Bharat Forge. Of course, the company came out with the numbers a couple of days back, stellar set of numbers. One of the leading private sector players as far as the forging industry goes, caters to the domestic and global players as well. Diversified order book from various sectors. Their defense foray is also going quite well, and the Class 8 truck orders from the US is also improving as far as high tonnage capacity trucks are concerned. Targeting somewhere close to about 850 to 860 on Bharat Forge from a long-term point of view. And the second one is from the healthcare, like I mentioned, Narayan Rudalaya. I think the stock has done extremely well. Earnings were in line or better than what our estimates were. Somewhere close to about 565 could be the target on Narayan Rudalaya.
All right, so those are the high risk and low risk ideas coming in from both of our experts on that note. Thank you, Kunal, as well as Gaurang, for joining us on Buy Now Sell Now, resolving the viewer queries, also talking about the power sector and giving your ideas, but of course. All right, on that note, we'll slip into a break in this edition of Buy Now Sell Now, but stay tuned, more on the other side, so don't go anywhere.